Sticking to your plan is absolutely essential if you're going to make profit in this market. What's up, everybody? Josh from Red Shorts Trades here. I want to walk through two trades I took this morning, and there were two clear violations of my plan. One of them ended up being a loss. One of them ended up being a winner, but the winner didn't outweigh the loss, so I'm red on the day. But I think it exposed a really interesting trend and an interesting 2 points that really you need to make sure you're paying attention to every single day. So without further ado, let's go ahead and jump into the charts. So there were two trades. I was watching SPY and Qs open up this morning on Monday. And the first thing that I started to see was a break up here. So I had my pre-market high marked out by this gold candle. This is on SPY. And we saw a nice push up. I was looking for potentially a retrace up to Friday's high of day. And I was waiting for that retest. The retest never happened. Instead, we had this massive bearish candle shoot straight through the pre-market high. This white mark here is the opening 5-minute candle low, so which signified the initial low of day. And we blew through that as well. So I was looking, okay, now I'm shifting to the downside. That's where my mindset is. And so I'm waiting for a potential retest into here. And this is where my first mistake was. So I'm on the 1-minute chart, which is typically where I like to take the entries from. Every now and then I'll take one off the 2-minute chart just in case I see a pattern showcasing. But what ended up happening was we shot straight up through this low of day, this 5-minute low with this nice green candle. So we didn't actually reject it, but then I saw this really big red candle get put in here and broke me back, retraced half of this prior candle. And then we saw this other candle really start to shoot in. And what I did, mistake number one, was I started shifting my time frames to see what I could see. And what I ended up seeing was I moved to the 2-minute time frame and I saw this really big hammer candle, though it didn't close as a bearish hammer candle. It just had a massive rejection. And that I felt was signal enough for me to potentially jump into the trade. And so I sized up. Again, I'm working with a small account right now, working on getting some additional funds in. But until those come in, I got a small amount in the account because I'm learning these strategies in order to become consistent here. And I looked for that as a short opportunity to the downside. Again, we were creating a new low here. We had a pullback and then we saw a massive rejection right around this level. So I started toggling time frames to see what I could see. Saw this big indecision candle here. And when I moved back to the 1-minute time frame, it just was not as clean of an entry. And I remember saying to myself when I took this, I was like, this isn't really as clean an entry as I would like, but let's see what happens. And sure enough, it didn't actually end up breaking these lows to give us some new lows. Originally, I was targeting for a really nice 2.42 risk to reward ratio, putting my take profit down at the pre-market low. But we ended up not doing that. Instead, we sliced back up here, and I would have waited. Point number two of sticking to your plan, I would have waited for a candle close here above my stop loss, which I put just at the body of this candle here. So it was a little bit above this, ultimately this 5-minute low. It sliced through that, but it showed some weakness around this. It wasn't pushing up as aggressively. So I was thinking, okay, maybe there's some liquidation here, some liquidity here that we ultimately would capture and then push further back down. So we started to push down again, but again, we didn't break these lows. So if you see structure wise, when it comes to the market structure being created, we had this, which was a low here, and then we moved back up for the pullback, but then we didn't break it to create a new low. Instead, we had a higher low, and then that was matched by a higher high because this broke above these bodies over here. And then again, we saw yet again another higher low. So this signifies in the short term, we're actually seeing an uptrend. So I ended up stopping out here, pulled out of the trade. Good thing I did because it ended up moving back to the upside. So I waited, which is good point number two. So two primary things to recap. What you don't want to do is you want to make sure, A, you're really waiting for an A+ setup. This was not an A+ setup at all. I just got eager beaver here on a Monday morning and started shifting time frames to see this rejection candle, to see what I wanted to see. I started reading into the chart, just given the price action. Wait for the trade to come to you, because that's what happened ultimately on the second trade I took. I was waiting ultimately for SPY or Qs to jump above the pre-market high. And what I ended up seeing on the Qs was Qs did it first. And what I saw here was I was waiting for it to ultimately break this high here, which a break of this high would have been right here. So I was waiting for a break of high a day to signify fully that we are in an uptrend. And so we broke the high, and then we saw these two candles were putting in some massive wicks. So they tried to pull price all the way back down to the pre-market high. Again, a potential entry level. And so we saw 2, 3, 4 of these. I ended up hopping in the trade right about there on that third candle, right about this third wicked candle right off that pre-market level. Again, we had put in a new high of day here by breaking this old high of day. So I was playing that as my bet. And then we saw price break up, put in a new high over here. And then it pulled back again, did another retest of that pre-market high. Again, my strategy here is a break and retest of pre-market high or a specific key level, maybe potentially the opening 5-minute candle. And so right here, we were retesting that pre-market high on Qs, and my ultimate profit target was twofold. I had this first white line here, which was in confluence with these rejections from Friday that we saw. And then the ultimate profit target was, again, high a day from Friday. And so we ended up taking a few minutes here to really get moving. But I put my stop loss, by the way, down here to the high of day initially from that opening 5-minute candle. So that's where I put my stop. Just up to this first take profit target was about a 2.81. So that hits my 1 to 2 risk to reward that I'm looking for. And ultimately, this would have been a 4.43 risk to reward if it went all the way to the second take profit. So here's a challenge now too, taking consistent lot sizes. My initial lot size, I took 3 contracts out. And so I over-indexed my size by this point because, again, I have a small account as of right now. I was only able to take out 1 contract. So even though this one ended up being a winner, I was still red on the day because I went too heavy on the first one. So point number 3 here, make sure you take consistent lot sizes. Don't size up. That's something that I'm always struggling with because you see something that looks potentially like it could be a good setup and then you want to go heavy on it. Really make sure you just stay consistent with your lot sizes. If you're going to take 3 lots in the morning, make sure you take 3 lots in the afternoon or whatever your second trade is if you're trading 2 or 3 times a day. So we ended up seeing this really nice break and retest off the pre-market high on Qs, and then it retested again, and then we saw it move up. I saw some indecision here. I tried to wait through it, but then I was seeing these pullbacks and ultimately I did not want to lose too many profits. So I ended up taking a 30% or 25% profit here on the trade, but it did clearly go up to my second take profit, which would have been the high day. And we're creating a new high currently above the 500 level. So this was the 2 trades that I saw today. So quick recap. What did we see? First thing, make sure you stick to your trading plan. Your trading plan being twofold. First off, make sure you're looking for the A+ entry that your strategy designates, because that's exactly what I didn't do here. Make sure you see it's got to set up right, it's got to wick right, it's got to look right. You got to take it on the same time frame and make sure, point number 2, your lot sizes are consistent between all the trades that you are taking. And then thirdly, make sure you're sticking to your plan. If you break, wait for a candle close above your stop loss, which I know, trust me, I was in this situation last week. I know it can be challenging to wait for that candle closure above your stop loss, because what if it's in only the first 15 seconds of the candle, it breaks above, and then all of a sudden it blitzes above that candle. Your losses are going to be a lot larger than what you had anticipated. So I totally get it. You have to make the judgment call, but ultimately wait for a candle close above. Don't pull out of the trade if it's in your red zone, but it's not actually hitting that stop loss. Stick to the plan. That's what I'm learning, and that's what I learned today. And when I do stick to the plan and I get my right entries, it works out a large portion of the time. So, all right. I hope this was helpful. If you found it valuable, definitely hit that like button and pound that subscribe button like you mean it, so you can continue to get more of the awesome content we're pumping out here at Red Shorts Trades. Until next time, we'll talk to you soon.